My advice to any importer or any corporate today who is importing is that the customs has said already that they use your official rate. So when you go and you do your imports and you get your customs assessment, look at field 23 where they put the interest, the exchange rate, and then check the official rate. If it's not the same, if it's higher, maybe it is a basis for you to make a claim.
You're welcome to the Economy and Politics Conversation. I'm Ottoabasi Abasiekong. This edition will discuss Nigeria's foreign exchange market stabilization efforts. And my guest joining me for the first time in the studio is Mr. Yinka Ogunnubi, President, Association of Corporate Treasurers in Nigeria. It's great to have you in our studio.
It's good to be here.
We always follow your conversations on national issues, economic issues, and it's quite interesting, the insights that you bring. So nice to have you. Let's first begin with Nigeria's foreign exchange markets. We've seen a narrowing of the parallel market premium owing to some of the reforms by monetary policy authorities, especially over the last 2 weeks. Do you see this as a sustainable and is it a triumph of the country's monetary policy management in the last year? You know, the central bank governor, Mr. Yinka Ogunnubi, at the bankers' dinner last year said they've made significant progress in stabilizing the market. Is that the case?
Yeah, I mean, absolutely. And it's important to put it in context. If you are comparing from where we are coming from to where we are now, it's remarkable progress. And I think we need to give the CBN and Yinka Ogunnubi's team their flowers. They've done remarkably well. They've been very disciplined with the monetary policy. And it has taken us to where we are today. The other part of your question is it sustainable? And that is a long conversation. You and I have had the same conversation several times. And you keep asking me the same question all the time. Is it sustainable? and that will always be the big elephant in the room, sustainability. And to answer that question, you have to look at what is feeding the so-called stability that we have now. Now, the Naira has appreciated significantly over the last few months, and we've seen an appreciation of close to like 3% just between November and now. And I know we keep seeing it, going up. We've also seen some level of contracting between the parallel market and the official market. So the question is, what is driving it? And when you look deeper into that, it makes you a bit cautious, not overtly optimistic, but cautiously optimistic, because a lot of what is driving that today is hot money. That is the influx of FPIs who are attracted by the high yields that Nigeria is giving on the back of a weak dollar and low yields. When you look at the net returns compared to inflation, there's almost a 5% net returns for any particular investor. So why shouldn't Nigeria be attractive? And so that is driving liquidity in the market. That's driving appreciation. That's driving the stability. The question is that sustainable? Especially when you look at it from the point of view of what will be a more comfortable position to be. The more comfortable position to be is that the appreciation of the Naira is driven by export proceeds and is driven by FDIs. But when you look at those numbers from export proceeds, it's a dip. It's not an increase. And so that just makes you concerned that, okay, hot money today, tomorrow, if the condition is not good, they can leave at any point in time. So how sustainable is it? So the jury is still out about sustainability. But have we moved significantly from where we used to be? Yes. And we must give the CBN its kudos for that.
Yeah, I mean, like you said, sustainability, we need to attract more foreign direct investment, just hearing what you're saying. And that has to do with our policies, which I think we'll discuss further. But let's look at something that's been on the front burner and conversations, which of course we have a lot of people that brought it up and on social media platform. Recently, there have been concerns expressed with regards to Nigerian customs service and the foreign exchange rates for imports and exports. Now, a clarification has been provided by the customs service on this. It's very important because, like you stated, if we have rates that have been stated, then we must abide by that, which the central bank has been able to stabilize. But I would like to get your perspective. Is it this explanation from the customs, is it satisfactory? Does it bring that expected transparency? Because you lead the treasurers, corporate treasurers in the country, and they are very critical in assessing that, making decisions, and even speaking with investors.
Yeah, so it's a problem for the Nigeria Customs Service, and even the CBN to understand that we represent corporate treasurers who are on the front line of imports in Nigeria. So if there's anybody you want to lie to, it's not them. Because they're importing every day, they're paying customs duty every day, they see the numbers and they see it. And a lot of our members were complaining quite clearly that they're paying custom duties that are not reflective of the official rate. And we saw that. In fact, if you go back and you just take a look at the customs rate from November down to end of January, you find out that it was consistent at 1451. And then at some point it went down to 14222 or something like that. Yeah. And it never changed. And all this was a period where the Naira had appreciated, but the customs rate never changed. It was just there. And a lot of our members were complaining about it. And so we needed to come out and to just make it clear. It's not difficult to establish, because I saw the customs position. Yeah. They were very, economical, with their position. But again, like I told you offline, we're not here to win a war or something. But their position was, the rate has always been official. They have always had the official rate. That's not the truth. They've always had their own rate, and they've never been able to do a full integration. From what they are saying now, they admitted to some form of not having full integration, and that they are going to work with the central bank to put in an API to capture the correct rate. Yeah. That's what we want to see. We want to see that the customs rate is reflective of the official rate and is not reflective of the parallel market rate. Because, like I said, what it shows is that it just doesn't give this sense of confidence, especially when you see that the customs is edging on the Naira. So it's not the case. But they've said that that's not what they were doing, that there was just a mix-up here and there, which is fine. We expect that they will go forward. My advice to any importer or any corporate today who is importing is that the customs has said already that they use your official rate. So when you go and you do your imports and you get your customs assessment, look at field 23 where they put the interest, the exchange rate, and then check the official rate. If it's not the same, if it's higher, maybe it is the basis for you to make a claim to say, please, you are charging me higher than the official rate. Can I get credit for this? Yeah.
It's interesting. The customs have come out to say that, there's been a lot of commendations for the Bashir Adeni regime. So, of course, this transparency is very critical so that we can continue to be seen as where we can do business. This is part of doing business too. Sure. Attracting investments and having that clarity. And, of course, the National Single Trade Window is something that everybody is anticipating. Now, let's go to what analysts have forecasted. And I'm really, really even looking forward to that. A net foreign reserve rate of $50 billion. It's something that, I mean, if it happens in 2026, but we'll get to that. While gross reserves, of course, have hit about $49 billion, almost the $50 billion mark. as at end of December 2025, now about $50 billion. The target is that it should hit about $65 billion by end of December 2026. A level that was last seen in the year 2008, where you had the global crisis. And of course, then we had, I think that was when Sanusi, Soludo was still there, Sanusi came in. Do you see this scenario where inflation rate will be declining? Because there's an economist, Dr. Teriba, that says when your exchange rate, when it's the Naira appreciates, inflation declines. That's very important. Do you see that domestic inflation will be declining to single digits on the back of this growth? Do you see this feasibility of the?
I don't see the inflation rate decline to single digits this year, and because when the Naira is an accretion, it leads to. I get the economics of it. Yeah. But we cannot remove the fact that we are in an election year.
Oh, pre-election year. Yeah.
Pre-election year.
You brought me to that. Yes.
So, and we know traditionally in Nigeria that it's a period of a lot of spending. So, from an economic point of view, you have to measure the money supply. And already, if you look at the money supply curve, it's already getting to almost double digits in terms of appreciation or increase. And it's only going to explode and expand as we get closer to the election. So the question for the CBN, for instance, is what do they do? So that's why this conversation will still go back to interest rates. So in which would the interest rate go down? With the MPC adjust?
Which was started today. Yeah,
and all that. They're starting their meeting. So within that context, I don't see inflation getting to single digits. I think it will go down. It will go down, but it might settle somewhere around the 12% by year.
For year 2026.
2026, yes. But that it will, given what we see, that it will aggressively hit single digits. I very much doubt that.
Can our net reserves hit $50 billion? Can we hit 65?
So for my own calculations, I looked at the calculations and I looked at the rate of growth of our reserves over the last 7 to 8 months. The reserves have been going at a rate of about 3.2% every month. So if you do the calculations and say, okay, where is it now? It's at 49 billion, right?
Yes.
Do that calculation in about 8 months. Sometimes in October, we should be hitting the 60 billion mark if it grows at that level. So I think that, yes, it's feasible. 60 billion, 65, I don't know. I mean, maybe that's stretching it a bit too far. Yeah. But I think we should be able to hit the 60 billion reserve. On the reserve, we should be more concerned about the quality of the reserves than in the value of the reserves. Because, you can easily take debt, pack a lot of FPIs.
Yeah, that's why we say we want to know the net, like the economists say, let's know our net reserves.
Let's know our net reserves. Yeah. Exactly. So the quality of the reserves is also very key, and it's very important. Yeah.
Very important. Let's see if we can hit for net reserves $50 billion this year. If that happens, to really impact the economy, especially, of course, a stronger Naira, inflation, all that.
Yes.
But Central Bank Monetary Policy Committee's first meeting for this year is already beginning, and we expect decision day tomorrow. What do you expect in terms of, we've heard some economists saying they expect loosening of the reduction in interest rates so that it can really stabilize the economy and stimulate productivity. But what is your expectation? And in terms of foreign exchange management, what kind of signaling would you like to see from the monetary policy authorities?
Well, I mean, if you ask me what I wish,
it's better to say expectations and around your context.
But I try to be a realist. And I think that the CBN might maybe signal some reduction, probably not more than 50% basis point.
Okay.
I don't think they will go really, really bullish in terms of reducing rates. I don't think so. I think they would like to keep what they have, and also anticipating that election spending and all that will increase. So they might keep it, but they might signal a reduction. What I think they will try to play with is the asymmetric corridor,
Yes, like they did last time.
like they did last time.
Yeah.
Because right now, reality is that in the market right now, a lot of banks are actually lending lower than the MPR. So rates for corporate lending right now is somewhere in the neighborhood of 22%, which is lower than the MPR. So, and you are able to do that because of the asymmetric window corridor that you have. So I think that they might play with that because they've seen that is a way to still keep the interest rate high, but then also encourage a lot more lending, at lower rate. So that's it. I don't think that there will be any dramatic reductions. Maybe not more than 50 basis points, but they will still try to keep the liquidity as tight as possible.
Yes. Thank you very much, Mr. Yinka Ogunnubi. Always a pleasure having you. And for the first having you in the studio, it's quite a refreshing conversation. We hope to have you at least subsequently to discuss how the foreign exchange market is doing, whether the Naira is getting stronger and stronger, and so that inflation would, of course, reduce, and we can see some better days for the Nigerian citizens. Thank you once again for this time to discuss Nigeria's foreign exchange market stabilization efforts. Mr. Yinka Ogunnubi, President, Association of Corporate Treasurers in Nigeria. Looking forward to future conversations. Thank you once again. To our viewers, if you want to get further insights on this conversation, visit the ProShare website displayed on the screen and the social media platforms to engage further. Till we come your way again, enrich yourself with the knowledge of socioeconomic developments around you because it is a wise thing to do. I'm Ottoabasi Abasiekong. Thank you for watching and bye for now.